The US dollar was sharply lower in early trade on Monday, giving back most of its gains from last week. The Euro USD pushed back above 113, a level which has acted as both support and resistance over the last 3 months or so. However, it's worth remembering that most US markets are closed for President's Day, so trading volumes will be lighter than usual. Last week, the euro came under selling pressure as German GDP came in flat for the fourth quarter, just narrowly avoiding a technical recession. However, the dollar took a hit on Thursday following a disastrous US retail sales update from December. This had been delayed due to the partial government shutdown, and investors were shocked after core retail sales post a month-on-month decline of 1.7%, well below the flat reading expected. Some analysts immediately revised down their US growth estimates, although others have suggested that there's a problem with the data itself, which will get revised up over the coming months. However, US inflation data was okay overall, with core CPI, which excludes food and energy, rising plus 0.2% month on month, which was in line with expectations. But the big news last week was the ongoing rally in global equities, particularly in the US. The S&P 500 surged through its 200-day simple moving average to close above this key marker for the first time in 10 weeks. The next upside target is 2800, which roughly marks the triple top which formed between October and December last year. A break above here should set the scene for a retest of the all-time highs around 2940 hit back in September. However, much will depend on the outlook for US-China trade talks, which will continue over the next couple of weeks. Traders are pricing in a positive outcome and don't expect the US to hike tariffs after the 1st of March deadline. However, it is much more likely that the deadline is extended for 60 days than a substantive agreement being reached. China is understood to be pushing back against US demands of an end to state subsidies, intellectual property theft and forced technology transfers. Meanwhile, cable has recovered a touch after breaking below 128.00 last week. By Monday afternoon, it was trading above 129 and hovering below its own 200-day moving average around 129.40. Gold continues to attract buying interest as investors hedge their exposure to equities and the dollar by increasing their holdings of the precious metal. Gold is currently above 1320 and the bulls have the spring 2018 highs around 1360 in sight. Data-wise this week, on Tuesday, we have minutes from the Reserve Bank of Australia's last monetary policy meeting, UK employment data and the German ZEW economic sentiment survey. On Wednesday, we have the Fed minutes, while on Thursday, we have ECB minutes. A deluge of manufacturing and services PMIs from across the Eurozone and US durable goods. Friday sees the release of the German IFO Business Climate Survey and speeches from ECB head Mario Draghi and a clutch of Fed members. Have a great week and good luck trading.